All right, trust you did well on your quiz. A little bit more of a challenging quiz, right? Forced you to really think through how to approach each problem. Had to take your time and reason through step by step. Okay, what do I have to do? Put yourself in the situation, think real life. Don't just, start adding or subtracting numbers. But trust you did well, or at the very least, if maybe you had a little bit of a struggle, and some of us did have more of a struggle than usual, do we learn from it? Do we understand it better now that we've gone over it? Hopefully that is the case. Your homework last night, though, page 27, had a little bit of review on here. Also, there were some terms that you were asked that were based on your homework reading. You read over pages 24, 25. We'll talk about that here in just a moment. For now, though, let's take a look at your homework answers. Number one, this actually was a important term to know yesterday. A plan to spend money wisely is called Elaine? Budget. Number two, money paid to the government each time a purchase is made is called, Joel? Sales tax. Number three, this is from your reading. Money paid to the government based on a percentage of a worker's paycheck is called what? Kirsten? No, you don't get sales tax on your paycheck. Sales tax is when you make a sale or a purchase. Ben? Number three.
Principal?
Oh my, money paid to the government? Percentage of a worker's paycheck?
Taxes.
Even more specifically,
Income tax.
Income tax. That's the whole thing you read about. How many of you maybe didn't do your reading? You try to just get by? No. It's just like in history class. You can't answer history questions if you haven't read the reading yet because it's based on the reading. Okay, there were several questions on here based on your reading. So make sure you're taking the time to do that. Would have been a shame if I decided to take this homework assignment for a grade if we hadn't done that. Throw that thought out there. Number four, when a large purchase is made, a customer will often buy on time or take out a what, Kirsten?
Like an amortized loan?
An amortized loan, or if you said an installment plan or an installment loan, all of those would have worked. But amortized loan is the best term there. Number five, when a customer purchases something on time, he'll often pay a certain amount of money up front, called, Ben?
Down payment.
Down payment. Number six, this is from your reading. The income a worker makes after all deductions, usually the standard deduction, is subtracted away is called blank. This is the amount from which tax is figured. What'd you have, Griffin?
Disposable income.
You were one who didn't do the reading, right? Someone who actually did the reading. Bryson? Well, there is a deduction, a standard deduction taken away from a person's income, and what's left after that is called what? Luciana?
I put net back.
No, you're trying to think of an old term. We're talking about taxes here. You found it?
No.
Taxable income. Taxable income. All right, make sure we're doing our reading. Taxable income. Put that in there if you didn't have it before. Number seven, the IRS form on which a worker indicates how much tax should be withheld from his paycheck is called what? He found this in the reading, Michael. Maybe not, he's changing his mind. Jalen.
W4.
The W4 form, the capital W-4. W4 form. Number eight, the IRS form on which an employer shows how much money his employee earned and how much tax has already been withheld is called what, Luciana? W-2. It's called a W-2. Number nine, the deadline to file taxes each year is, Kirsten?
April 15th.
April 15th. April 15th. Tax day. Number 10, if a person has more taxes withheld during the year than he actually owes, then the IRS will issue a, Ben?
Standard deduction?
No, Jalen?
Adjusted gross income.
Oh, you're just guessing at terms instead of actually reading through and paying attention. Elaine?
1041.
That at least makes sense grammatically, but no. Tax refund. A tax refund. A person has more taxes withheld than he actually owes. IRS will issue a tax refund. Make sure we're reading carefully through our reading. Number one, it would have helped you on the homework. Number two, it would really help you as I'm talking today for you to actually retain what I'm teaching, because it won't be the first time you're seeing it. That's the whole reason, by the way, in history and science class and even literature, your teachers give you reading. It's not because they think you have nothing else to do, but you're not going to remember squat from their history lesson if that's the first time you're hearing it. But if you've read it once already, you've already kind of familiarized yourself a little bit with these things, then when they teach it, it sticks. And some of you wondered, why am I struggling so much in history class? Well, maybe actually do your homework the way you're told to do it. That would help. Same thing kind of applies here. All right, let's go on. The rest of it, pretty review type stuff from this point forward. Number 11, Evelyn sells jewelry for Marks & Morgan, receives a 1.5% commission on all sales over $2,000. This is in addition to a weekly salary of $500. Last week, she was responsible for $3,700 in sales. Find her total income for the week. Well, income is how much money she makes, right? And she is paid 2 different ways. How is she paid, Griffin?
Commissions.
And?
A salary.
She's got a salary and commission. Let's start with the easy part. What's her salary?
$500.
So she's getting $500. If she sells nothing, and all she does is clean the glass on the jewelry counter where grubby little kids' hands touched on it and made it not beautiful, and she shows up and is there to be a pleasant, smiling face to greet people and try to talk them into buying overpriced jewelry for their, whoever. If that's all she does and she makes no sales, she still gets $500. But they want her to make sales. So they tell her, hey, if you sell more than class, $2,000, we'll give you a commission on everything above that mark that you sell. So really, they really want her to sell at least how much a week, class? $2,000 a week, right? She wants to sell more than that. How much did she actually sell, Griffin?
$3,700.
All right, so she went over the 2,000 mark. By how much did she go over $2,000?
$1,700.
This is the amount of sales she gets credit for. The first 2,000 is expected of her. She went over that mark, so she is credited for sales of 17. Does that make sense? Mm-hmm. We've only seen 1 or 2 problems like this so far. So if you struggle with that, don't worry about it too much. Now, what's her commission rate, Griffin?
1.5%.
I got to change that to a?
0.015.
And do what with it?
Multiply it.
By the 1,700. So how much is that? How much commission does she earn? Anyone?
$520.50.
$25.50. That's her commission. Does that make sense? Now, if you had multiplied by the 3,700, you had a much bigger number here, right? So if you were, I think somewhere around $60-ish of commission, something like that, 60, 70, that's probably what happened there. You should then take the commission, add it on the salary, because she gets both. So she ends up making, class,
$525.50.
there we go, $525.50. Questions on that? Now the next problem builds on that. Michael, it says Evelyn had $103.06 deducted from her paycheck. What was her net pay? Well, she was supposed to make $525.50. If she had $103.06 deducted, what's her net pay?
$422.44.
$422.44. How many had that? 422.44. All right, now again, I would have assumed you got the first answer correct. Questions on how to do number 12. Does it make sense? Just subtract the deductions away. Any questions on how to find net pay? All right, then number 13. A year ago, Evelyn was earning a weekly salary of $425. Based on number 11, find the percent of a raise or increase in her pay she received to the nearest whole percent. Well, commission varies every week, doesn't it? So we're really not interested in the commission. We're only looking, class, at her set pay called her salary. She was making how much a week, Jalen?
500?
Well, she is now. She's now making $500. It says a year ago she was making $425. And it says it wants us to find the percent of raise or percent of increase. Class, how do I find percent of increase or decrease?
Change over original.
Change over original. What is the change in her pay here, Jalen? Help?
$75.
$75, okay? And then what's the original amount she had been making, Jalen?
500.
That's what she's making now. What was she making? What was the original amount she was making? 425. All right, does everyone see that's the change over original? So if you didn't do it before, type it into the calculator now. And what is her percent of increase, her percent of raise that she gets rounded to the nearest whole percent, as it says? Jalen, what you got now?
6%? Or 7%? Wait.
75 divided by 425? Corey?
6%.
Corey, 75 divided by
Oh.
425. The top number has to go in the calculator first. What do we got now, Jalen? Amend your answer?
I got 18%.
18% when you round. 0.18 is what it rounds to, so 18%. How many of the 18% there? Questions on that? It's been a little while since we talked about percent of change. Questions on that? All right, number 14. All about Evie. Evelyn had her income direct deposited to her checking account. So her income from number 12. Okay? So number 12, we said she ended up with $422.44. This is her net pay. This is what actually goes into the bank account, right? So she had that much deposited. It had a prior balance of $57.82. So what do I do, class?
Add it on.
Add those two things together. Okay, so where's she at now? If we add that on to the old balance of $57.82, we're not looking for the final answer yet. Where's she at now?
$480.26.
480.26. Someone have the same answer?
Yes.
480.26. If you like that number? Okay, so this is now her balance after she gets paid. But then look what it says. That week she spent $501.47 paying bills. Now hold on just a second. Everyone look at the chalkboard. This is her balance, right? Now watch this number as I say my number. She spent $501.47. Anyone got a problem with that? Yeah, so does the bank. All right, so what's going to happen, class?
Yeah.
She's going to go over, isn't she? She's going to, what's that term when you spend more than you've got in the bank account?
Overdraft.
Overdraft. She's going to overdraft her account, isn't she? So her account is going to have what kind of number in it? A negative number. So if you did not have a negative answer on 14, we already know what's wrong. It's got to be negative something. Ends up being negative what? Corey, do you have it or are you fixing it?
Negative $21.21.
How many? Negative $21.21. Negative $21.21. Does that make sense? All right? It doesn't to the bank, but it makes sense to us. That's at least what we've got. So that's where she's at. Now, number 15. From number 13. If Evelyn's bank charges a $30 overdraft fee, they're like, hey, we'll pay your bills for you like you wanted, but we're going to stick you with a fee because you went over. Well, she's already in the negatives, right? And now they're going to charge her an additional class $30. That's going to take another $30 out of an account that already has negative money. What's her balance now after the overdraft fee? I'm sorry, I'm not wishing this on you, Evie. Luciana?
Negative $41.21.
Careful, this is $30 overdraft fee.
Oh,
So take away 30 more, and that takes us to negative
$51.
$51.21. And there's our final answer to the sequence of problems. So good review of banking. It's been a little while since we've looked at those things. Questions on that? Questions on the homework? All right. Well, the time has come. We got to talk about taxes. Flip over to page 24. Page 24. Taxes. You need to know, first of all, 3 letters. IRS. Okay, and your parents' least favorite letters probably around this time of year. But IRS stands for Internal Revenue Service. Mark that. The Internal Revenue Service is the department of the United States government that is responsible for collecting money from all the hardworking Americans to help fund the government. Now again, I'm not completely bashing this because I'm thankful we have military. I mean, what if we didn't? Right? So I'm thankful we have military. It also helps to pay politicians' salaries. Some of them I could do without. Anyway, but they want to get paid. There's all kinds of bureaucrats. Most of them we could do without also. But there are a lot of necessary government functions, and the government needs money. In fact, just watching some information in the news last night about this. And apparently we've got a bad deficit. You all probably know we have something called the national debt. It's increasing, I think it's like $53,000 every second that the government spends that it doesn't have. And so obviously at some point the government has got to get more money, okay? And the way government gets money is taxes. So there's probably a tax increase coming, which makes absolutely nobody happy, right? So anyway, there are probably going to be more taxes coming. But there's a couple of things that determine taxes, okay? First of all, how much money do you make? The more money you make, the more taxes you pay for 2 reasons, okay? First of all, your tax is a percentage of what you make. But they have what are called tax brackets. How many have heard that term on the news? We were just talking about it last night, tax brackets. So There's this, if you make a certain amount of money and you're kind of poor, okay? And you make in this range, they're going to take 10% of what you make. Okay, so God gets 10%, government takes 10%. Now, not quite 10% because there's a deduction coming we'll talk about in a minute. But if you're poor, they take 10%. If you're kind of poor,
Middle class.
not middle class yet, you're just kind of poor, they take 12%. Now, once you cross into that next threshold where you actually truly are middle class, now they take 22%. There's a big jump right there, right? 12% of your salary, not too bad. 22% is a significant number now. That's almost a fourth of what you make. Okay, so 22%, that stinks, let's be real. And then you go up to a next tax bracket and then you're upper middle class. And I think it's 28%. I should have done some research on this. And then if you make, like if you're rich, then it's like 30-something%. I don't remember what it is. But there's this upper tax bracket. If you're really, really rich, you're making hundreds of thousands of dollars a year or more, then it's like really, really insanely high. They also tax businesses on what they profit throughout the year. And if you invest money, they tax that as well. But they take different amounts. So depending on how much you make, you're going to pay a different amount because you're paying a percentage, but also because there's different tax brackets. There's another thing that affects, though, how much taxes you have to pay. And it's number 2, the amount of credit he expects to claim based on the number of dependents he has. Okay? So in a way, you are all a blessing to your parents because you save them on taxes, your very existence. Now, you only save them a couple grand on taxes. And you probably cost way more than that. So in the net aggregate, don't try to use this as a reason to justify your existence. Your existence is justified because they love you, they care about you, you're special to the Lord, and you're created in His image. But don't try to use the tax credit as justifying why they should love you, okay? Because you end up costing them more than you save, but you do save them a little bit at tax time, okay? So that's a nice thing. Here's how it works. When beginning a new job, an employee fills out a W-4 form. Mark that. And then mark the sentence below it. Helps the employer to know how much to deduct from each paycheck. So mark W-4 form, and right below it, helps employer to know how much to deduct from each paycheck. The more dependents a person has, that's the government term for you guys, okay? The more dependents a person has, the less an employer will typically withhold. Because the government doesn't want as much of a person's money the more kids that they have, okay? So, for instance, I'm to the point now where the government's like, yeah, you make so little and you have 4 kids, we're not going to take anything that you make because I get so much credit that way. Okay, so now, income tax. There's other taxes we're going to get to a little bit later on that they still take plenty of money, but they don't take income tax because I got enough kids and I make little enough money. The more money you make, the fewer kids, it all just depends. But it's based on class the what form?
W-4.
W-4 form. That tells the employer how much every month to send to the IRS. So if you are gainfully employed, you get your paycheck. Remember, we already talked about things that are deducted from the paycheck. Well, the employer automatically sends money to the IRS on your behalf every month of the year. IRS gets some of that money, and that's based on the W-4 form. Yes, ma'am?
Do missionaries get taxed?
They do, because they're United States citizens. Well, it depends on how much money they make. Now, most of them don't make a lot.
Yeah.
So there's probably a large portion that, there's probably not much that they would pay in taxes, at least not income tax. There's 2 other taxes we're going to talk about tomorrow that they still have to pay and fund into. But yeah, I mean, everybody, you make money, you got to pay taxes on it. So,
Like, if they don't have a job, if they're just getting offerings from churches?
well, but that's considered income. That's considered income. Now, what they're not getting it withheld every month, they have to send it at the end of the year. But yes, or at least possibly. Most of them go through a mission board who actually collects it all and pays them. That way they can pay the taxes so the missionary doesn't have all that headache. Right? That's why going as an independent missionary is a challenge because you're doing all your finances on your own. It's much better to go through a mission board who's already got all the office staff in place. They know all the rules and regulations. They've got their probably even a tie to a legal team that they can make sure they're following the law. That way the missionary, just when they get their money, they're good. They file their taxes like everybody else. It doesn't even become convoluted for them. But yeah, even love offerings, it's all taxed. Everything taxed. Yeah. Now, I mean, if you were to go up to a missionary and hand them $50, Okay, there's no record on that. That's not necessarily taxed. But an actual official check that goes to the mission board, that kind of monthly support, that one certainly does have to be taxed, yes. All right, gifts. Gifts are only taxed if they exceed, I think it's like $5,000. A gift over that amount is taxed. Other than that, I don't think, something like that. All right, so W-4 form. That tells the employer class how much to take out of the paycheck, to deduct from the paycheck. We all go with W-4.
Yes.
And the money goes to what corporate or what entity class? Not corporation. IRS, which stands for Internal Revenue Service. Okay. Now, at the end of January each year, we're underneath the picture of the W-4 form. At the end of January each year, the employer must send copies of the employee's W-2 form to the employee and the IRS indicating, now here's where you need to mark, how much income the employee had the previous year. So mark W-2 form, and then below it mark how much income the employee had the previous year. You find out from your boss at the end of the year on a W-2 form, hey, this is how much money I made, and how much taxes came out, and how much of the other things came out, and all these other deductions came out. You get that report. It's an end-of-year report. But the copy also goes to the IRS. They also have one on file on you. So that way, if you don't send in your records right, they got the proof. Okay, so IRS gets a copy, you get a copy. The W-2 form is a wage statement. It tells how much you made. Make sense? Okay, so there's two different forms. Don't get them confused. W-4, when you start the job, how much do you take out to the boss? How much do you send to the IRS? W-2 is at the end of every year, January of the next year technically, and it tells the IRS, it tells the employee how much they have made. How much did they make? Okay, and how much taxes already comes out. Now, next page. Traditionally, the employee would then fill out a 1040 form to the IRS in which he'd either indicate additional taxes still owed to the government or taxes due to be refunded from him. Now again, 1040 form technically is still filled out, but most people do it electronically. How many of you have either seen your parents or know about your parents using something like TurboTax, TaxSlayer, TaxAct, one of those different tax software? Okay, there is a 1040. They just don't actually fill it out on paper anymore. Nowadays, just about everybody does it online, or they go to a tax agent, they fill it out for them, usually online still. But when you print out the document at the end for your records, there is still a 1040 form. You're just not filling it out by hand. So you see a picture of what the 1040 form kind of looks like. It's front and back, and there's all kinds of attached schedules is what they're called. But the main 1040 form looks something like that. And that's where you list out all the different numbers that the IRS needs to know. Okay, that's actually telling the IRS, this is how you figure out, do they owe me money? Did I pay them too much? Or do I owe them money and so I have to pay them? And that's kind of sad. Okay, so the 1040 form is actually the tax form. If you'll just write that next to it, it's the actual tax form where you're actually filing your taxes. You're sending your report into the IRS. The W-2 gets attached to it, okay? But that form helps you to figure out, do you owe money or do they owe you money? Everybody got that? Okay? Ideally, they owe you money and you get a little bit of money back, which is always nice. Now, he may also fill out additional forms if he had income from investments he had made, or if he put money into a tax-deferred retirement account. These additional forms help him to calculate his adjusted gross income. Note that term. Adjusted gross income. For instance, let's just use some round numbers here. Let's suppose somebody makes $50,000 a year, but they have an investment in which they made another $1,000 off of the investment. Well, they didn't make $50,000. They made $51,000. Does that make sense? Or let's suppose a person made $50,000, but they put $5,000 of that into a retirement account that's tax deferred. Well, that means they don't get taxed on that $5,000. So they made $50,000, but $5,000 went over here on the side. How much did they really make, class? $45,000. That's their adjusted gross income. Jalen, don't do that. All right, adjusted gross income. Yes, ma'am.
Okay, this is kind of sneaky. But
Sneaky. You said sneaky or stinky?
Sneaky.
Sneaky. Okay, that's what I thought you said.
So if you put all of this money that, like, if you made $51,000, if you put like a bunch of it in the savings thing, okay, so you don't get taxed on that. But then after April 15th or whatever, you take it back out.
Yeah, so the tax-deferred savings plans you can't touch until after you turn 65 and a half or whatever the age is when you retire. And when you take it out, you pay taxes on it. However much you take out, you pay taxes on what you take out. So you do, I said tax deferred, not tax free, okay? So you wait until later in life to pay taxes on that money. But right now, at least, yes, you could. I mean, you could put all 51,000 into that, which means case you don't have to pay any taxes on it because it all went to retirement. But you will pay taxes when you take it out later. So, yeah. Yeah, so they will get you. Oh, believe me, the government is not going to be cheated out of money. Now, there are tax loopholes. You hear about those from time to time where the really, really rich people with lots of lawyers can figure out how to move this money here and that money there. And that's why rich people get audited a lot. And the IRS tries to figure out, what are you doing here with your money? Let's make sure that there was nothing actually illegal, just clever. But anyway, yeah. For most of us, we just pay our taxes like normal people. Anyway, but adjusted gross income is how much you really made. Just write that off to the side. How much you really made. When everything's taken into account, how much did you really make? Does that make sense? Adjusted gross income. How much you really made after everything's considered. And that's all figured out on the 1044. Okay? That's where they pull all the different little extra numbers that you didn't even think about until you got this form from this place, and this form from this place, and this form from this place, and there's your adjusted gross income. All right. Mark the next sentence. Each year, taxes are due to be filed by April 15th. Know that date, April 15th. Now, how it usually works is if you think you're going to get a refund, you think you paid more to the government than you were supposed to, and you're supposed to get some of that money back, then you want to file like as soon as you can in February. And if you think, I'm going to owe the government, then you wait till like April 14th to do it, so you don't have to pay them back any sooner than you absolutely have to. But anyway, it is good practice to keep records of all tax forms, including W-2 forms, for 3 years in case of an IRS audit. Now, usually it's the rich people who get audited, but anybody can be audited if they think something looks fishy about these numbers. So they will reach out to you. And so all the tax forms that you have, you want to keep a record of all of those. By the way, one of the things you can get credit for is if you give to your church, right? Church giving. How many of you have noticed your parents at the end of the year, they get a paper from the church saying, hey, you gave us this much money. Better hold on to that paper in case the IRS audits like, did you really give this much money? We want to see proof. Better hold on to those papers, because if you can't back it up, you can be in a peck of trouble. So hold on to your paperwork for at least 3 years in case of an audit. Audit just means they come asking about your numbers. Okay? So there's some things to keep in mind. It talks about tax software in the next thing. Big fan of tax software. I really like tax software. It just asks nice, easy to understand questions, and you answer the questions, and then it knows where to put all the numbers on the paper. And it does all of that for you, and it's worth it. I just did my taxes this past week, actually President's Day. I celebrated by getting my taxes filed. And I paid $133 to Tax Act for them to do all my taxes, and I just answer questions. It was worth it. I don't like paying $133, but it was worth it to not have to figure all that out and fill out all those papers and wonder if I'm screwing something up. Big fan of tax software. But anyway, you can technically still do it by hand. It is important to note that the IRS does not tax a percent of your adjusted gross income for the year. Y'all see that sentence? They don't actually tax. When I was showing you those tax brackets, they don't actually tax the adjusted gross income. They allow you to deduct a certain amount away because they know you have living expenses. Okay, so the government allows a certain portion of your income to be tax-free by giving you what's called a standard deduction. At present, a married couple can deduct $27,700 from their income, and they only pay taxes on what is left. So if you made $30,000, which isn't much, that puts you in the poor area. Okay, if you're poor, okay, and you only make 30 grand, well, by the time you take away $27,700 from that, you're down to what is it, $2,300? Now take 10% of that. You're only paying $230 in taxes. You're not paying 10% of everything you make. You're paying 10% on what you make after the $27,700 has been deducted. Okay, this is called taxable income. Note this, taxes on what is left after this deduction, taxable income. Okay, so mark the phrase right before where it says taxable income. Taxes on what is left after this deduction. So that's a married couple, $27,700. A single person gets to deduct half that from their income. So if you're not married, you still get your half of that. So you don't have to be married to get the deduction. You get $13,850 taken off of your income before they start taxing you on that. So taxable income is what is left after the standard deduction. Now, Let's suppose that you get married and you and your wife end up giving $50,000 to charity. Well, then you deduct your $50,000 as opposed to the $27,700. Does that make sense? So the $27,700 is there for people who don't give more than that, but everything you get is deductible if you give to charity. Your church is considered a charity, so giving to the Lord it helps you out a little bit there. In addition, this just makes it more convoluted, right? Tax credits can be claimed by parents with dependent children that count toward taxes due. So when it comes to the taxes, and they're like, okay, parents, now listen up here. Parents, you owe us $1,500. And they're like, yeah, but we have Ben. Oh, you do? Well, we'll give you $2,000 towards your taxes because you have Ben. It's amazing. If they only owe $1,500, and let's just use a nice round number and say Ben gives them $2,000, they actually get $500 from the government because it's a tax credit. It's not even a deduction. It's an extra bonus. So you have Ben, you only owe this much, we actually owe you more. They give them money even though they didn't pay them. Don't ask me how that works, okay? But tax credits can be claimed. Again, look at the tax software takes all of this convolutedness. How many are feeling like, this is so weird? Okay, it is. Tax software does it for you, is the point I'm making. You don't have to understand every in and out of it. The tax software is going to do it for you. Now, tomorrow we're going to work through a bunch of problems that deal with this to help you understand a little bit better, just to give you an idea of it. But the main thing is, know your facts, know your terms from this, and hopefully I'll help you understand the terms a little bit more tomorrow. Look, if you would, at page 26 before you pack up. Look at page 26. And we'll work through some of these terms like gross income, net income, taxes withheld, deductions, all this kind of stuff, taxable income, adjusted gross income. We're going to work through all of this tomorrow. Okay, so this page is what we're going to be working on primarily tomorrow. And after we're done, I think you're going to understand it a lot better. Okay, so if you're feeling a little confused on it now, part of it may be because you didn't read last night. So I'm going to say this. If you did your homework, you know, hey, I did it, I read it. This probably made some sense to you. If you're like, yeah, I didn't read it in study hall. You don't have a lot of other homework tonight anyway. I'm not giving you any written homework. Take the time to read through these 2 pages again. Now that we've marked some things, starred some things, written a few notes here and there, read through it again. Make sure you understand it before we go into tomorrow. Questions, sir?
Wait, we have study hall today?
Well, we'll get later on today then. All right. When the bell rings, you're dismissed. Have a wonderful rest of your day.